Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market balanced within yesterday's range and overall in a very narrow range. Heading into the open, we have pre-market support at 90.5 to 92.5, and holding above it tells us that the market is still in a very balanced state and it can really tip in either direction. On the downside, a break below 90.5 to 92.5 would be the first warning sign that perhaps the control on the smaller time frames is shifting from the buyers to the sellers. It would bring the 87 to 87.5 high volume node into play and the 82.5 to 84.5 initial support, at which point responsive buyers can still step in and defend the initial support zone, but it is going to depend on how the market is approaching that zone and just how weak the other markets are and how the day is setting up in real time. Because even if you zoom out a bit, you can see that the market is developing a big range, and it has been very range bound over the last several days. So as we head down into 82.5 to 84.5, we're going to have to see the level of weakness we're seeing in the broader market. If we are heading down on a very weak advanced decline and the momentum is completely bearish, then the zone may not hold. We have already gotten a reaction there pretty much yesterday, and at this point, if we're seeing a lot of weakness in the market, then 82.5 to 84.5 still would be an area where, even though buyers can step in, it calls for discretion and caution. On the upside, we have resistance at 97 to 99 quarter, followed by the larger time frame resistance at 2103 quarter to 2105 quarter. Now, because we are trading near larger time frame resistance, we've just been in this environment where we have to approach every day with a very neutral bias, and we have to see how that specific day is developing because we are near some pretty big resistance here. Short term, the market's very balanced, it's range bound, and for those reasons, it can really go either way, and we have to be flexible with our intraday bias. So into the open, if we are holding 90.5 to 92.5, then that tells us that the buy side can still maintain control. And then on the upside, a breakout above 97 to 99 quarter would bring the 03 quarter to 05 quarter into play. Now that area marks the all-time high, so there isn't any actual resistance beyond that area. And beyond 05 quarter, the market would be making fresh all-time highs, and it would really just have to exhaust the range of the day to essentially stop on the upside. So the 15 to 18 is not hard resistance. It's simply an area where the range would be quite exhausted. So right now, the way the market is setting up, we have to approach it with a bit more caution. And like I said, you have to be more flexible with your directional bias because the bigger question that we're going to be answering and the thing that we're looking for over the next few days is whether ES is going to break to a fresh all-time high or whether we are going to see a bigger rejection here and a deeper pullback. So those are two bigger scenarios that are working underneath the surface, and it's just a matter of time before one of those bigger scenarios takes place. So on the downside, if we're coming down on heavy momentum, a lot of broad market weakness, the other markets really cracking down, that's exactly why, initial support doesn't necessarily have to hold, and we have to use caution there. And below 82.5 to 84.5, the sell side would be more dominant, so we have to allow the market to get exhausted before considering fading it and going long again. So 75 to 77.5, although it's still an area where buyers can be active, it still calls for caution, and we would have to allow the market to get short-term exhausted into a zone before we started fading it again in the event that we were really cracking down. Because if we do break down below 82.5 to 84.5, even a test of 69 quarters, 71.75 is not out of the question. It could take place, and that is a spot where ES would likely be quite exhausted, and we can get a bounce at least on the day time frame. So that is how the market is setting up at this point. Keep an eye on 90.5 to 92.5. Like I said, that's going to be a early warning sign if the sellers are to gain control, and then we'll just take it step by step and understand that the market is bigger picture balanced here, and in order to really trend to the downside, we are going to have to see broad market weakness and participation from the other markets. And similarly, on the upside, in order to break above the 2105 quarter all-time high, we're going to have to see a lot of broad market strength, sustained upside momentum, and again, the other markets participating in the move. Otherwise, it can be a fake out or a false breakout beyond '05 quarter, and it gets quite risky. So, right now the market is just in a state that calls for a little more caution, a little more discretion, and if that means missing a small move here or there, then so be it. On the economic calendar, we have the oil number out at 10 a.m. Central Time, so just be aware of that. It has been a market mover recently, so if you're in a trade, make sure that you're in from a very good trade location, from a good zone, and then perhaps it's okay to hold it. Otherwise, just be aware of the 10 a.m. economic release with the oil number, because at least on smaller time frames, it can certainly spike the volatility a little bit. So those are the main ideas heading into the open. Let's keep an eye on 90.5 to 92.5. It's going to help us establish the bias on the day, and we'll take it from there.